Double tops and double bottoms are, in my view, a vital ingredient in any trader's trading strategy. They are high probability trades, and these include, of course, the head and shoulders tops and the head and shoulders bottoms as triple tops or triple bottoms, because they include a double top or a double bottom within them, within the pattern. And chart patterns, as I say, they're high probability trades, but you need to have defined criteria for the type of double tops, double bottoms, or triple tops and bottoms that you take. And so there are loads of these sort of patterns, and there are times when you just don't take them. You can't take them because the probability in the trade being successful is too low. And so in this video, I'm just going to explain to you using an example such as this one here. This looks like a really good double top, triple top, and I didn't take the trade. And so here's why. So here's the chart then. You've got on the left hand side of the screen here, you've got the 5-minute time frame chart, and on the right you've got the 1-minute time frame chart. And this is the double top and head and shoulders top that I'm referring to. So you've got the left shoulder, the head, the right shoulder, and the trade would be from below the middle here, below the middle and downwards. And for the double top, the left top here, the first top, is higher than the second top, and the trade is down from here. So the price is exactly at where the entry would be, and I wouldn't take it, and I didn't take it, and I wasn't trading at the time. And here is why. So basically, this is on the 5-minute chart on the left here. Let's just have a look at what's been happening with the price action. This is in the morning on the left of the chart, and we're coming up to lunchtime now, and things have gone a bit quiet, and that's one of the reasons why I'm not trading. Okay, so good volatility, the market's going up, swinging down, and then you've got loads of spikes, and it's choppy, messy, and basically the market's going sideways in a range. Top of the range up here, every time it's got up here, the market's gone down. Bottom of the range down here, every time it's gone down here, the market's gone up. So it's in a level range. And so, you know, you come in, it was in a downtrend from this stage here, just about here. It was in a downtrend, the market was going down. You got a higher high, lower high, lower high, lower high, and then the market was in a trading range on the 5-minute time frame. So the market's in a trading range, and that doesn't disqualify double tops or triple tops, head and shoulders tops or bottoms. It doesn't disqualify them. It just means that you need to be careful with your context. And as you know, I'm always looking at 3 C's: context, content, and confluence. The double top, the head and shoulders top, is content, but the context has to be right. Well, it's at the top, isn't it? It's at the top, but careful examination of the 5-minute time frame means that you're looking at a low, similar low, and then a higher high, higher low, and a higher high. So what does that mean? Higher highs and higher lows mean that on the 5-minute time frame, the market's in an uptrend, and you don't take double tops, or I don't take double tops or head and shoulders tops, triple tops in uptrends. I will take high probability double tops and triple tops in downtrends. So what I mean by that is that you see here 1, 2, 3 triple top, one top, two tops, double top almost, if you like, and that one there was in a downtrend, and the market had pulled back to above the exponential moving averages, and it was rejecting down, and the market came down and the trade completed. So that was a good triple top or double top, and that's the type of double top, triple top that I think you can trade confidently with good probability, and I know that you can trade it for a living. You can't take double tops in uptrends, and you can't take double bottoms in downtrends, because more often than not the downtrend and the uptrend will continue and stop you out for a loss. So you have to be careful with context for these type of trades. So here we've got the beginnings of possibly an uptrend. The market pulls back, so here you are on the 1 minute chart, high, higher high, lower high, so there's your double top, and you're looking for a trade which would be, the profit would be the difference between where your stop would be, which would be here, and where your entry would be, which would be down here, and you're looking for a target that would be more than that, so the target would be down here. And you can, in this case, I wasn't even really watching what was going on, paying too much attention, other than out of interest, because look at these numbers here. This is 13,230. This is 13,232. Well, there's only 2 points difference between these numbers, which means the candlesticks are too small. There's not enough profit in the market. There's not enough volatility. The risk on the trade would have been about 4 points, which you may think, only a 2 or a 4 point risk. Oh, great. But you've got to think about the reward. The reward is only going to be 4 points maximum, and out of that you've got to pay your charges, which in this case for my broker it's 1 point, so it's a quarter of the profit as a charge, and that isn't, combined with the probability isn't great, and you'll find it hard to do more than break even when the volatility in the market is like that. So there's not enough distance between these numbers, the bars aren't big enough, and I'm not trading. There was a massive bar here. Where did that come from? It was probably some sort of news, which you can't trade the news, and I wouldn't trade the news because the risk is too high, and you can't read into the price action what's going on in the news. You can't take trades based on a big spike like that, other than after the spike has taken place, I know that there's a good chance that this top here is going to be retested, and it hasn't been yet. So this is another reason why this isn't a good trade. So far, the things against the double top trade is the average true range is too small. There isn't enough volatility in the market, so I'm not trading. I'm not trading short, I'm not trading long. If I was trading at all, I'd be going long right now, and I'll tell you why. Because I'm expecting a retest of these highs, and I'd expect the market to come down, hit this combination of exponential moving averages down here somewhere, and then bounce up and test this high here. So, if anything, I'd be going long, but I'm not doing anything because the volatility is too low. And so also, these offer great support and resistance, these exponential moving averages, especially the longer term ones have more power in them in terms of offering, in this case, support, and the chances are the market's going to bounce. It might bounce around a little bit and then go up, but it's going to bounce. You can see on the 5 minute chart here, there are lots of pins at the top. That's all great, but
you've got big support down here. You can't, you can't tell on here, but there's the last rejection of resistance was here. Market's broken through resistance. What happens to resistance after it's broken? It becomes support, and you can expect some support here. So let's have a look quickly at what happened. I'll take a copy of that, and lo and behold, what happened was we had a bounce. We had a bounce, and the market went up to test these highs here. And where did it bounce from? It bounced from the exponential moving averages. Time and time again this happens, and I do take those type of trades. And this here, there's a combination of candlesticks in here which would have allowed me to take this trade up from here. But I wasn't trading because the volatility is too low. 2.5 points average true range, not good enough or high enough for me. So I wasn't trading, didn't take the trade. So careful with your context. Always trade with the higher time frame trends. Take the double tops, double bottoms in pullbacks, not for reversals, because you're going to get better and higher probability. Hope you found that useful. My name's Anthony Beardsall. Join me as always on the next one. Thanks for joining me on this one. And if you're interested in learning to trade, then we do have some trading courses at excellenceassured.com/trading for you. Forex trading courses and day trading training courses as well, and lots of strategies in there that you can use straight away in the markets, and tutoring, coaching for you, all you need to get you started in trading and to get you through to where you want to be, which hopefully is trading for a living. Thanks ever so much for joining me again. My name's Anthony. See you on the next video.